Yeah, it's another day that we are looking at continuous revision of business data analysis, and today we are looking at a question on taxation of income of individuals, specifically employment income. And we shall read through this particular question. Henry Mola, who holds a dual citizenship, had been living in Denmark since September 2014. He returned to the country on 17th of December 2020 and opened a hardware shop on 2nd January 2021. On 1st of July 2021, he secured a formal employment with Best Freight Limited, a logistical company, as a fleet manager. He provided the following information relating to his income for the year ended that 1st December 2021. And number one, basic salary was on 80,000 per month. Pay was 46,000 per month. He was paid overtime amounting to 30,000 per month, risk allowance of 25,000 per month during the year. The employer provided him with meals worth 5,000 per month. He received house allowance of 60,000 per month. Up to 30 September, he used his personal car for official duties, and the employer reimbursed a monthly mileage allowance of 40. On October 2021, he was provided the saloon car 2400cc purchased by the company in the year 2019 at a cost of 2 million. He was out of office on official duties for 5 days, and he received a per diem of 6,000 from the employer. The company paid school fees of 80,000 for each of his 3 children during the year. This was included in the employer's books of account. The employer bought 120,000 air ticket to facilitate Henry Mola to visit the rest of his family in Denmark during his annual leave. With effect from 1st July, he contributed 15,000 monthly as pension contribution and 92,000 for life insurance annual premium respectively. Then he bought a residential house on 1st September 2021 through mortgage of 6 million provided by Excel Bank Limited at an interest rate of 16% per annum. He moved into the house on 2nd of October 2021. The net loss from his hardware during the year amounted to 370. This was after deducting the following. We have the salary, salesperson, VAT, rent, electricity, furniture and fittings, and computer. So the record determined the total taxable income for Henry Mola for the year ended that 1st December 2021 and compute tax payable if any from the income computed in C1 above. So shall do it here. Yeah, so we do it on this end, and I will start with employment income. Employment income. Employment income. Okay. I'll put bottom border to this. Okay. And here it starts with the basic salary, and you're told he was earning a basic salary of 180,000 per month. But for how many months? Remember, he started this work on 1st of July, so shall be dealing with 6 months. Yeah, 180,000 by 6. Let me calculate it here. So this will be equals to 180,000. We multiply by 6 months. 180 multiplied by 6, which will be 1080 for a period of 6 months. Then he was paid overtime and risk allowance. So we have overtime here, overtime allowance, and the next one is risk allowance. Overtime was 30,000 and risk was 25,000. Yeah, remember it's per month. Overtime you have said is 30,000, so this will be 30,000 multiplied by 6 months, and this one will be 25,000 multiplied by 6 months. It was for a period of 6 months. And the other one, number 3, the employer provided him with meals. So Meals to low income earners are tax free, and low income earners are those that are earning less than that 5,000. Less than that 5,000 using the current rates, they are regarded as low income earners, and their meals will be tax free. But this one is earning 180,000 per month, so this one is not a low income earner. So free meals will be taxed, free meals, and for the meals it will be 5,000 by 6. 5,000 by 6 months, it will be 50. Then he received a house allowance of 60,000, so we have house allowance here, house allowance of 60,000 per month, 60,000 per month. So here it will be 60,000 multiplied by 6 months, for a period of 6 months. Then up to September, he used his personal car for official duties, and the employer reimbursed a monthly mileage allowance of 40. So this one will not be taxed because it was for official duties. He was using his car, so whatever he was fueling or maintaining the car, that mileage allowance that he was given will not be taxed because it will be a reimbursement of amount that was spent on official duties. Number 6, on October 2021, he was provided the saloon car 2,400 purchased by the company in the year 2019 at a cost of 2 million. So we have car benefit. And for the car benefit, you normally take the higher of the cost. And when you look at our cost, the cost was 2 million. 2 million. We multiply by 24%, 0.24 per annum, and we multiply by 6/12 for a period of 6 months. We multiply by 12%. Because he was provided the car from July. On October 2021, he was provided October for a period of 3 months. Period of 3 months, not 6. Period of 3 months, which will give us 120. And the 2400cc, 2400cc, whereby we shall look at this, the rates. Just a minute. Here under the rates, we have the prescribed benefit rates for motor vehicle provided by the employer. We have saloon car. Here it was a saloon car. There are 3 categories, either saloon car, pickups, or Land Rover. So for saloon car, normally if they have not talked about the type of the car, the assumption is it will be a saloon car. So in this case, we have 2,400, which lies between 2,001 to 3,000. So you can either decide to take the annual 103,200 by 3/12, or we take monthly. So per month the benefit will be 86. So I'll take 86, the benefit per month, 86 by 3 months, 86 by 3 months, which will be 25,800. And so you'll take the higher. Let me just copy this, seems it's too far. Let me cut that and paste it here. That way. So here the higher will be 120. So I'll pick this value as my value there. 120,000 and 20,000. Okay, so the next one, we're done with the car. He was out of office on official duties for 5 days and received a per diem of 6,000 from the employer. So in this case, the assumption will be receive 6,000 per day. Because they have not talked about the total of the per diem, 6,000 per day for 5 days. Per diem is the amount paid while one is out on official duty. And per diem, the first 2,000 is exempted from tax. So I'll open the bracket. So 6,000, I minus the first 2,000 that is exempted from tax, and I multiply by 5 days because there were 5 days official duty for 5 days and received a per diem of 6,000. So this one, remember here we are assuming let me put here, assume per day, assume 6,000 per day. Yeah, so we have assumed is 6,000 that was being paid per day. The next one, the company paid school fees of 80,000 for each of his 3 children during the year. This was included in the employer books of account. So if it was included, it means that the amount was used as an expense, so it was expensed. And normally the criteria, if it is expensed, the employee is the one that will pay the tax. If it is not expensed, then the employee, if it is not expensed, the employee is the one that will pay the tax. But if it is expensed, that is treated as allowable, the employee is the one that will bear the burden. So here we shall have school fees, and school fees was 80,000 for each of the 3 children. So there are 3 children here. It will be 8 by 3, it should give you 240,000. Then the employer bought 120,000 air ticket to facilitate Henry Mola to visit the rest of his family in Denmark during his annual leave. So remember, for the leave or passages, taxation of passages, they are exempted, but for passages you normally say criteria for the amount to qualify as a passage, the employee must be hired from, he must be an expatriate, that is an un-Kenyan, and he must be in Kenya solely to serve the employer, not to do any business, not to do any other thing, but solely to serve the employer. But we see Henry Mwala was holding the dual citizenship, so he was working in Kenya, and at the same time he was holding an dual citizenship for Kenya and Denmark. And before even he secured the formal employment, already he was working in Kenya running his hardware shop. So in this case, because of that reason, this amount will not be allowable, it will be taxed. Yeah, because he's supposed not to pay for himself to go and visit his family, considering that he is having dual citizenship. So the 120,000 will be taxed. Yeah, so the air ticket, yeah, passages, yeah, the passages is the air ticket. It will be taxed. The 120,000, that one will be taxed. Then with effect from July, so this was the contribution now that he was making to pension. I think that's all up to that. Then the other one was the business income, whereby we shall so the contribution to pension, a life insurance, and the one for mortgage. So these are our employment income. The employment income, we shall have it here. I'll use articles. Yeah, this total up to that, and I will put the top border, and I will bold that value. Yeah, and this one I can bold this. That will be our employment income, and we less allowable deduction, less allowable deductions, and I will put bottom border to this. Yeah, contribution to pension, and here we have our actual. The actual contribution to pension, we are told he contributed about 15,000 monthly as pension from July, so it will be for 6 months, 15,000 by 6, and I have the set limit here. Set limit is normally 240,000 per annum, so 240 by 6 months, which will be 120. We take the lesser, yeah, and it will be a negative. The lesser here will be 90,000. Then we less contribution to mortgage interest, contribution to mortgage interest. So for the mortgage interest, we have the actual, actual amount. He was contributing for the actual amount 6,000. Here he bought a residential house on September through a mortgage of 6 provided by Excel Limited on an interest rate of 16%. He moved into the house on 2nd. So it's count from the time he moved into the house on 2nd. So she'll take 6 million, and he multiply by 16% because we need the interest, and he multiply by the period of 3 months from the moment he entered the house, from October, November and December. So shall get to 40, and our set limit is normally 300 per annum, 300,000 per annum. So for 3 months, which will be 75. So we take the lesser, which will be 75, the lesser between the two, which will be 75. I think those are the two items that he was contributing. Shall get net employment income, and for the net employment income here, alt equals, it is a sum from here to here, this value, and I will bold that, and I will put the top border on that. So that is our employment income. So you have the income, and the incomes. In our case, when we talk about other income, this person was having a hardware shop. And the hardware shop reported a net loss. The net loss from the hardware shop during the year amounted to 370. Let me do it here. So you have net loss. I readjust that. We had made a net loss of 370,000. 370,000 was our net loss, 370,000, and we shall add non-allowable expenses. These are expenses that they had deducted but they were not supposed to be deducted. And the first one, I'll start with VAT. Here VAT is not allowed, and the VAT was valued at 180. I'll add it back. Furniture is capital in nature. Now we shall calculate wear and tear for furniture, which had a value of 250,000, and the other one was computer. So computers here, and it was 300 here for the computers. So I'll put articles to get the total of this, and put the top border, and I will less allowable, less wear and tear, so wear and tear on furniture. So furniture is at the rate of 10%. It's a negative now. We take this multiplied by 10%, and computers are 25%. I'll take it as a negative. Here is the value multiplied by 25%. So that our net taxable income now from the hardware business, it will be 260, and adjusted taxable income, it will be 260. Use top and bottom border, that way. So here we shall have our hardware profit or business income, business income. In this case is hardware income. Yeah, hardware income, the business income from the hardware, which was 260. You get your total taxable income. Total taxable income alt equals the sum of the two, and I'll put top and bottom border and I bold that. That is how the first question was supposed to be done for 6 months. Yeah, because that is the duration that he was employed, for duration of 6 months. Then we calculate number two for the tax payable. Number 2, we look at number 2. Yeah, number 2 here. Compute the tax payable if any. So here shall start with the first. The first category of our income here, the tax rates. So remember, now we shall not use the annual. I'll go with the monthly, but I multiply for 6 months, or I go with the annual but for a period of 6 months. Yeah, still you can go with this, but I apportion this for only 6 months because the income was only for 6 months. So I'll go with the 288. Yeah, the first 288 by 10 by 6 over 12 for 6 months, which will be 14,400. Then the second category, we normally take 388 minus 288, the difference here, which is normally 100,000 for the whole year. Yeah, 100,000 is the difference for the whole year. So here we shall multiply now 100. So the next 100,000 by 25 by 6 over 12 again for 6 months. It should be that, and we check the excess. So our excess, when you take 388, because it's normally excess of over 388, and 388 is for 6 months. Yeah, so it means that will be 388. Let me say 388 by half multiplied by 6 over 12. So it means is 197,077 for 6 months. So here we shall look at the excess. Excess will be the actual amount, open the bracket, minus this value. Here I close the bracket and multiply by 30%, because that's already for 6 months, by 30%, and I'll get that value. I get my gross tax, and here I put alt equals, and I enter top border that way, and I bold that value. I less the set of starting with pay, and our pay that was deducted was 46,000 per month. So this will be equals to I minus 46,000 by 6 months. For a period of 6 months should be 276. I minus personal relief. Personal relief is 2,400 per month. Here 2,400 or 28,800 per annum. So whichever you can use per month, or this one per annum you divide by 6 or by 6 over 12. So here it will be 24 by 6. Put a negative 24 multiplied by 6, it will be 14,400. We have insurance relief, and for the insurance I will take the 15% of the premium, 15% of the premium, so here 15% of the premium. So for the premium that was being paid, the premium was 92,000. Yeah, with effect from 1st July 2021, he contributed 15,000 monthly as pension contribution and 92,000 for life insurance annual premium. 92 was for the annual, 92 by 6 over 12, by 6 over 12, 6 over 12 for 6 months, and have the set limit, and the limit is normally 60,000 for insurance by 6 over 12 for 6 months, which is 30. So the lesser between the two, it will be 30. You less 30,000, you get your net tax payable, net tax payable, which will be articles. Yeah, so from here to here, yeah, that will be our net tax payable, net tax payable, which was 371 to 77. And that's how that particular question was done. So I shall just go through to see whether we have captured everything. The first thing was that the employment started on 1st of July, so we have captured for 6 months. Yeah, the basic for 6 months, pay for 6 months, he was paid overtime again for 6 months, employer provided meals for 6 months, received house allowance for 6 months up to 30th. This one I've said is not taxable, the mileage, because it will be for official duty. Yeah, saloon car, we have calculated that from October for 3 months. Yeah, per diem we have assumed 6,000 per day for a period of 5 days, where 2,000, the first 2,000 per day is exempted. School fees was treated as allowable, so he will pay the burden of tax. He bought this one I've said is taxable, the ticket, the passage, because he's not an expatriate, with effect from this. So we have considered that from July, the contribution to pension, which is allowed, and for the life insurance premium, which is it is a relief that reduces the tax liability. Yeah, then we have dealt with this one for the mortgage, which is allowed, and we have recalculated or recomputed the loss, and we got an adjusted profit for that particular hardware. And that's how we have calculated this particular question for Henry Mola for that particular period, and that's all for this question. So continue subscribing, yeah, for more informative content and for more revision of this kind and this nature. We know there are just few days for you to do your exam, so gear up and continue revising, and may God enable you that will be able to understand and pass business data analysis.